Yo, what is going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took throughout the week and how we came out green trading the system. And for those that don't know, the way that I trade, it's called the system or Colton system, and we use options charts to determine our entries on futures or options. I mean, it's whatever your preference is to trade, but I personally like trading futures versus options, just my personal preference. It was an interesting week. First half of the week, I'd say, was pretty rough, and then we ended the week on a good note on Friday. A little refresher of what the system is and how we, go into each week and take trades and determine where the market is going. So first thing we look at every Monday is the Friday contracts. The Friday contracts tell you the main trend in the market. So every Monday you find the opening price of where SPY is. So if we opened at 561, you round it to the nearest fifth. So that'd be 560, and then you add 5 for the calls. That'd be 565 calls, subtract 5 for the puts. That's the 555 puts. I don't even know what we opened at this week. That was just like an example, but that's what you do for the Friday contracts. They tell you the main trend in the market, and how you read them is pretty simple. So if the 10 is below the 50, there is no trend on the contract. So if we look at the left side of this chart before Friday, we were neutral. And then if you pull up the call side, I guess, in this case, we had the 575s, 565s. So, 10 was below the 50 here. That means we're neutral. So, earlier in the week, though, the market was bullish right here. You could see the 10 crossed below the 50, market was bullish. This is how you would read the chart. And at this point, the market is trending. And then obviously this trend was very short-lived. As you can see, we broke below the 50 right here. As soon as we closed below the 50, we're pretty much in a neutral market. And then once we actually cross down, that's when we officially are neutral. And, you could expect a choppier time when that happens. But when we get that initial cross down on the 30-minute, we usually see an opposite move in the direction of the premium. So in this case, since we're going negative on the call side on the 30-minute, that means we're going to see most likely a move down, which would increase the put premium. So that's exactly what happened throughout the week, or in was that Monday and Tuesday, maybe that was, I don't even know. Wednesday we ended up going negative. So that's how that pretty much played out and how you read the charts. So 10 above the 50 on the Fridays, we have trend. So initially, going into the week, the market ended up flipping bullish, obviously, because like I said, this chart right here on Monday ended up gapping up. We crossed, market's bullish. So what do we look for in a bullish market? Very simple. 0 DT cross on calls, 50 dip on calls, pretty much any trades to the upside, because that is the trend and you want to be trading in favor of the trend. It's very simple. There's no reason really to be going against the trend. There's certain circumstances where you do, but for the most part, you're trading in the direction of the trend, and that's where you're going to do the best. So since we are bullish, we're looking for long. So this is what we looked like Monday. This is what the chart looked like on the 0-day chart. Again, if you don't know how to pick the contracts, it's very simple. Every day you get 2 0-day contracts. You find where SPY opens, round to the nearest dollar instead of the fifth dollar. Like the Friday contracts, we do the fifth dollar. For SPY, it's the nearest dollar, and then you add 1 for calls, minus 1 for puts after you round to the nearest dollar. So we ended up getting the 572 calls, and we ended up getting the 0 DT cross right off of open. And this is one of those circumstances where this wasn't really a trade you were able to get in, because we gapped up so much. The risk was just way too high on this, because the premium was all the way at $1 a piece, and the 10 and the 50 SMA were all the way down here. You can't see it right now, obviously. This is after the cross happened, but when we got the initial cross at open, the 10 and 50 were so far from where price was, and that's just not a cross you would take. If you wanted to get in on this, you'd buy this 10 dip right here. This 10 dip gave the absolute bottom before we ended up going higher. You can see we hit the 10, we went all the way up to $2 on the premium, or over that. So that went 1.40 to what is that, 205 maybe. Doesn't seem like a lot, but that gave a solid, I think, 60 to 70 points on NQ futures, and that's what I trade, and that's a solid move. And then you would sell it all once it breaks the 10. It broke the 10 there, then it got back above. I mean, I wouldn't really play the reclaim at that point. I'd wait for this 50 dip, which is something that I think Colton called out in the Discord. I'm not sure if I called it out, but I know Colton did. And yeah, we buy this 50 dip down here. When we're in trend, you buy this 50 dip. You always buy the 50 dip when we're trend, because a lot of times this 50 does hold, and it will hold throughout the whole day, because we have trend in the market. And we bounced right off the 50, got I think around 40 points on NQ, but then we couldn't really get to the 10, and then it broke down and closed below the 50. But even when we did close below the 50, I'm pretty sure you would have been break even on this anyways. There wasn't really any, red on this trade once we did break below the 50. I mean, what I like to do is when I buy that initial 50 and we get a nice bounce, I pretty much moved my stop loss to break even because I know if this comes back down, it's most likely going to break the 50, and we're going to, cross negative on these contracts. So, that's kind of how I like to play those. Once we get a nice solid bounce of like 40 points, I'm moving my stop. I'm not letting that flip on me. And then once it comes back down, okay, if it wants to stop me out, so be it. And, if not, we get a very nice move out of it with nice risk to reward. So, that's how you go about, how you would have played Monday. This 10 dip you could have played. Other than that, these other trades, I mean, you could have played some small reclaims, but the best opportunities are the initial cross, the first dip maybe to the 10, and then after that look for the first 50 dip. So those are kind of like the three things that I would look for when we're in trend. So the initial cross, a 10 SMA dip, usually the first 10 SMA dip holds. I don't know what it is, I just feel like it always holds, or there's a good chance that it does hold, and then wait for that first tap of the 50. Those are the trades you want to be taking. But yeah, that's how you would have played Monday right there. And then I'm pretty sure you could see, yeah, this was the chart right here on the 30-minute of what we looked like on Monday, because the 10 went above the 50's trending up. That means the market's bullish, like I said, and that's why we focused on the long side here. And then this was a trade we took on Tuesday. Very solid entry right here. I mean, this is a call cross. The market's still bullish. I'm looking for an entry. We're getting this call cross here at 10:35. This was an entry that I took. A lot of the times it's more than just waiting for the estimates to cross, because I do get in, I feel like, a lot of the times before it actually crosses, because I know the market's bullish. We have trend. Most likely this is going to go and cross here. And with how close the 10, the 50 are, 50 is already like curling up a little bit. The chances that this crosses is very high. And, I'm not waiting for this to like pump a ton before it to get in. So, it's always best to wait. You could have waited maybe like a couple more minutes, but I wanted to get in right here. It looked really good. So we went long, and you can see we got a nice move out of it. And then, eventually this did break below the 50. So, NQ at the time was very strong, and I think this gave like 60 points. I think I was up at one point, and we came down to the 50 right here. And the funny thing is, when we came down to the 50, I was still like 30 to 40 points in profit, just because of how strong NQ was versus ES. So as you guys know, SPY follows ES, and ES follows SPY, same exact thing, and then NQ follows QQQ, and vice versa. So, for some reason, NQ is just the stronger pair for the day, and this dip to the 50, you could have bought right here. Like I said, you always buy these 50 dips in trend, and this is like probably the best case scenario is when, you're trading the pair that's stronger, and we get like a 50 dip, and you can just average up. It's like a very low risk entry because you're already up 30-40 points, and we're at a very key spot on the 0-day chart. So average up right here. It was a great spot to do so. The chart looks really good. I was very surprised that this did not go higher because of how good this looked. As you can see, look at this. The 50's curling up. The 10 is nice, and it's holding, and we just, it just failed. I mean, it is what it is. When we closed below the 50 here, I was still up like 30-35 points. So I didn't take a loss on this at all because NQ was a lot stronger that day. You could check the chart yourself, but that's how it ended up playing out. It's not always going to work out beautifully. We still got 60 points, but in a trending market, you could typically get like 80 to 100 points at NQ when we get one of those crosses, but it won't always work out. There's nothing in the market that is 100% certain, and that's something that a lot of people gotta like get in their head. Like, there's no strategy out there that's perfect. That's just how it is. And the system gives you those high probability trades, and if they don't work out, it'll work out most likely next time because the odds are in your favor. And this is something that I would be taking any day of the week. It just looked very good, and 9 times out of 10, this thing is going to go across, and we're going to get a huge move out of it. It just didn't happen in this case. And then, once we close below the 50, that's your ultimate stop loss on the trade. So, you close your position. That's your hard stop on the trade is when we lose the 50. And you can see what happens. We lost the 50, and then it broke even lower. But, and that's not something you would take a trade on. Once we close below the 50, you don't go, oh, okay, since we lost the 50, this is probably going to go lower. No, that's not something you take because the trend is bullish, and it could, it could still snap back up if it wanted to, but, you don't want to be taking a negative cross on calls when the market's bullish. That is just not a trade you want to be taking, like not even close. That is the worst possible trade you could be taking in a trending market on the call side. Like, you don't want to be shorting when we're bullish. So yeah, hopefully that got drilled in your heads. And then this day, what is this, Wednesday, I believe. Wednesday was a weird day at open, won't lie. It was very choppy, as you can see, and I was looking for longs. Like I said, the market's still bullish at this point, and this is on the puts right now. Puts ended up coming in this 50. I didn't short this, long this 50 because it was relatively flat. If you guys know, when the 50s are like more level, and not slope down as much, it's less of a resistance and it's more likely to break. So, I wasn't just going to go short this. I was going to wait for the rejection at the 50 and then close below the 10. And, we ended up breaking above the 50 here. And I was waiting for a closure back below the 10 with the 50 like curling down. So we ended up closing below the 50 right here. But you can see, or we ended up closing below the 10 and the 50 right here, but the 50 still sloped up. I was waiting for that to curl up more, or I mean not curl up, curl down. Like in this case, you can see the 50 ended up like curling down a bit right here, and that's where I entered. I went long right on this red candle right here after it closed. You can see we got back below the 10, the 50 right here, and then next candle we got a nice little pump, but this didn't end up playing out. I think I was up like 30, 35 points at one point. I was looking for more though, and this is what ended up happening. So once this chart here lost the 50, that's when I got out. That was my stop loss. So this green candle right here, that's when I stopped out. That's my ultimate stop loss on this trade, is the 50 SMA. It's like the same goes for the call side. That 50 SMA is your stop, and same goes for when you're playing like a reject on the opposite side of the premium, or just a reject on the premium in general. And again, funny thing is that NQ was a lot stronger than SPY. So this chart right here, when we closed above, I was still in profit by like 10 to 15 points. So luckily, again, like I was still in profit. So these weren't really necessarily losses. They were just small winners, if that makes any sense, because NQ was just the stronger pair again. It was weird because before this happened, NQ was the weaker pair, and then ended up like flipping and flip-flopping. So, this chart ended up crossing right here, and this is where the market got sent neutral. So if you look here, this is what the chart looked like. So this is right around a little just before noon Eastern time. You can see, yeah, this is like 11:30. This was going to go and cross, and it pulled back a little bit before it actually, dumped lower. You can see right here, we ended up getting this massive green candle here, and the puts ended up crossing. And at that time, this chart right here on the 30-minute was going negative. So, this was a good opportunity to go short because we were losing this key spot on the call side. The 50 or the 10 and the 50 were both sloped down, and what I mean by that is this 10 SMA you can see is like pointed down super hard, and the 50 started to curl down a tiny bit. It's hard to see, but we were sloped down a little bit here. And with us breaking below the 50, the 10 down hard, puts crossing, this was likely to go a lot lower. So this was a cross you could have taken. If you didn't take it, that's completely fine. I mean, there was still a chance that 30-minute chart did hold, and if you didn't take it, that's all good. The market's getting sent neutral possibly. Or you just wait for the negative cross on the put side and trade in the favor of the trend if we held the trend. Obviously, that wasn't the case, but that's just like a scenario that could play out in your head, or of like what your mindset could be. And there's always going to be another trade. You don't have to take every single trade the system gives. That's something that a lot of people probably don't understand, is that, okay, if the system gives a trade, you don't have to take it. If you're green for the day and the market, you're like unsure of where the market's going to go necessarily, you could just back it up. Like, that's something a lot of people don't understand. They're trying to make as much money as fast as they can, and that's a lot of people's problems, that they're focused too much on like the dollar amount they're making and how much they're making. Like, your goal at first should just be to take high quality trades and be consistent. Like, make consistent winners, take good trades, and just be profitable. Like, that's your goal. Like, the dollar amount really doesn't matter, because it's all in terms of like scale. Like, you could just get like 20 accounts and you'll be you could take on the same risk on those accounts, but you're still making a lot more. So that's some people's main problem when they are trading the system, or just in general, is like the dollar amount. That is completely irrelevant when you're trading. But back to the charts here, obviously the put cross ended up happening right here. We got a nice move out of it. You could have taken this. This gave a load of points, and I was looking for a 50 dip right here to get in, to take more short, because if you guys know, I went over this in the last video. So you are only supposed to buy the 50 dips when the market's trending. The only time that you go against that rule is when this 30-minute chart here is crossing negative. So it's like the same thing as a positive cross on the 30-minute. You buy the 50 dips, right, in trend. Okay, now it's like the reverse. So when we're initially crossing negative on the 30-minute, in that 0-day chart crosses, you could buy this 50 dip if we got it, because it's like the same thing as if the chart was positive. This 30-minute chart is crossing down, just like it's crossing up. You could buy the 50 dip. If it's crossing down, you could buy the 50 dip, but it's only on the initial cross down. You don't continue to buy the 50 dip after the move already happened. So, if we go back, like at this point, what time is it? It's 10:40. I don't even know when I took this picture, but like you wouldn't be buying the 50 dip on the 0-day chart when we're all the way down here after the move happened. So, you know, on that initial cross down up in this area, yes, if we got the 50 dip, you could buy it, but we never got the dip, unfortunately, and that's how you would have just played that. I mean, that's kind of the mindset you got to have with these trades. You don't buy the 50 dip in neutral market unless it's on that initial cross down of the 30-minute, like of the initial loss of trend for the bulls in this case. So hopefully that makes sense. And, you know, that's something that some people get confused on, because, you know, I see a lot of people like, oh, I thought we don't buy the 50 dip when we're neutral. You only do it when the 30-minute chart is initially going negative. It's not like after the move already happened and, you know, we've been negative for, or we've been neutral for a little bit. So hopefully that makes sense. And then, you know, on, what was this, Thursday, this was another trade you could have taken. So on the 0-day chart, the puts were at the 50 SMA on the 30-minute on the Friday contract. So I don't have the picture of it, I don't think, but you just keep in mind the 30-minute chart on the put side was right at the 50 SMA, which, if you guys don't know, 50 SMA on the 30-minute chart is a key pivot point. So like when we got back above this 10, the 50 right here on the put side, I'm not taking this because I know we're at a very key pivot point and I'm waiting for a long entry. So what is that? What would I be looking for there? A negative cross on the put. So we end up getting that right here. The 10 is going below 50, 50 starting to curl down, and then also we ended up going negative on the 5-minute, on the 30-minute. Hopefully, it's a lot of stuff to, like, you know, if I don't have the picture, it might be a little confusing, but just know it was a negative cross. You know, you could take the negative cross on the Friday contracts on the 5-minute time frame when we hit the 50 on the 30-minute. Like the initial rejection, you could flip down on the 5-minute time frame, and once that chart goes negative, you could actually take a trade off of that. It's not something I went over that many times, but just so you guys know, I went over it this week in the video from whatever day this is, the 27th. So if you want to go watch that video quick, I did explain it. But, you know, the 0-day chart was going negative as well, and so was the Friday contract on the 5-minute. And that's the only time you know, take a trade from the 5-minute on the Friday contracts is when that 30-minute 50 SMA gets hit. You could flip, go to the 5-minute, and wait for the 10 to cross below the 50 on the 5-minute. And this right here is the 0-day chart. It was pretty much the same type of trade for both of them. They were both going negative at the same time. So since the chart was going negative, pretty much confirming the rejection, as, you know, the 5-minute on the Fridays were going negative and the 0-day chart was going negative. So, you know, you go long, and then we got a nice move on it, and we ended up popping in the 50 on the call side. And this is where you could take profit. I ended up holding this a little bit longer because since that 30-minute chart was rejecting the 50, there's a good chance this was going to go break above the 50, and we got a nice move out of it. Got like 100 points. Very nice move. Can't complain with that at all. So hopefully that makes sense. And then I was just waiting for this chart to cross, and we got the cross, and man, this looked so good. I'm really surprised this didn't play out, because you can see, look how good this chart looked. The 10 crossed above the 50, 50's curling up. I mean, this looked like I would take this any day of the week. This is a beautiful, beautiful setup, and this is probably one of the best setups there is when we get a cross. We get like a slow cross, the 50 starting to curl, and we're still relatively close to that 50, so it's low risk. And, you know, it just didn't end up working out. So, you know, it looks like you got absolutely destroyed in this, but you didn't, because when the 50 initially, like, it sloped back down. So once it sloped back down, you would have gotten out, and it ended up sloping back down on this green candle right here before we ended up dropping. So even I think it sloped down on this candle here too, but I tried to give it a little bit more time because of how good it looked. I mean, it looked very good, but since we couldn't curl after that candle, I got out. I think it was like a 10-point loss. I mean, I'd be taking that trade any day of the week. Like I said, it looks so good. Like when you look at this chart, like I was shocked it didn't play out. But, you know, you never know what's going to happen. But, you know, the odds were in my favor right there. The only problem was that the market was neutral, so I guess that's like the downside of this trade, that we're not trending. But, like, just on the 0-day chart alone, this looked really good, and the price action was pretty good beforehand. So, you know, it was just unfortunate. It didn't play out. A small loss on NQ, can't complain, and that's where we packed up the day on Thursday. It was a very, very simple day. Hopefully you guys learned some things from this video, and yeah, hopefully you guys picked up on some things, because there's a lot of information in these videos. And, you know, if you watch all the videos throughout the week, you should have a good understanding of how these charts work. If you watch all of them, I'm telling you, you'll really learn things. You don't need to be in the Discord to learn. If you want to see how we take these trades live throughout the day and like what we're looking for each day during the day, you know, that's the place to be. If you really, really want to learn and invest in yourself, that's the place to be. We have live streams in there. We post our trades. We post what we're looking for and things like that. So hope you guys enjoy enjoyed, I'll video up tomorrow of the recap from Friday, and then the game plan going into this week. So if you guys enjoyed, drop a sub, join the Court if you want to learn. I'm out. Peace.